Today, we're tackling a topic that confuses a lot of board members and frustrates even more homeowners: HOA insurance. If you've ever asked, who covers this? What's the deductible again? Or why are my premiums going up every single year? You are not alone. Insurance is one of the biggest line items in your budget and one of the most important protections for everybody in your community. Today, we're going to walk through what's covered under your HOA's master insurance policy, what owners are responsible for through their own individual HO-6 policies, the claims process and how to navigate it smoothly, deductibles, loss assessments, and financial exposure, and then RowCal's approach to insurance guidance and emergency response. And lastly, how to ensure your policy actually fits your community. Let's start with the foundation: the HOA master policy. Every association needs a master policy that protects the community's common property and shared structures. Here's what most HOA master policies include. Starts with property insurance. This covers the shared buildings, the roofs, the elevators, mechanical systems, clubhouses, and any association-maintained infrastructure. Then, general liability insurance. This covers injuries or accidents that happen in common areas, such as the pool or park or hallways. Then we move into directors and officers, or D&O coverage. This protects the board members from personal liability for decisions made while serving for the association. Then, crime and fidelity coverage. This covers losses from employees or volunteer board members who may embezzle funds. Then, umbrella liability. This is additional liability protection beyond your standard policy limits. The policy must be tailored to the type of community that you live in. Then single-family HOAs, you may insure only the common elements like a park or a monument. Townhomes often insure exterior walls, roofs, shared components. Then condos usually cover the entire building shell and may include portions of the interiors depending on your own individual governing documents. So here's a real story. A condo board assumed their policy covered all water damage, including the pipes inside the walls. But when a pipe burst in one unit, the master policy didn't cover the interior drywall, flooring, or cabinets because the HOA CC&Rs stopped coverage at the paint. The owners had no HO-6 insurance. 5 of the units had to cover an $8,000 to $12,000 out-of-pocket expense. The lesson here: know exactly what your master policy covers and what it does not. HOA insurance doesn't cover everything. That's why owners must carry their own HO-6 policy, also called a condo owner's policy. This covers the interior of their unit, drywall in, their personal belongings, loss of use if they must relocate during repairs, personal liability, and most importantly, loss assessment coverage for when the HOA levies an assessment related to a claim. Why loss assessment coverage matters. Let's say there's a hailstorm. The roof is covered by the master policy, but the deductible is $250,000. That amount is split between the 100 units. If a homeowner doesn't have the loss assessment coverage on their HO-6, they pay their share right out of their pocket. If they do, their policy may cover it up to the limit they chose. So here's a real story. An HOA filed a storm claim. The deductible was $180,000. Each of the 120 homeowners received a $1,500 assessment. Half the owners, they had HO-6 policies with only $1,000 loss assessment coverage. The rest had no coverage at all. Now imagine if every owner had received a reminder to review their HO-6 coverage each year. HO-6 education protects your community and prevents board blowback when homeowners say, "Nobody told me." So please, take a stance and educate yourself and educate your homeowners on the importance of their HO-6 policy. Deductibles, they have risen sharply in recent years to offset the high cost of the premiums. It's not uncommon to see a $10,000, $25,000, or some deductibles with a 1 to 5% wind hail deductible on condos and townhomes, sometimes totaling 6 figures. Many boards don't realize that the HOA is responsible for the deductible, not the insurer. And unless your governing documents say otherwise, the board may choose how to allocate that deductible back to the individual owners. So here are some options. They could assess each owner a portion, an equal split. They can charge the owners who benefited from the claim localized damage. So check your governing documents and talk to your attorney before assessing any deductible back. One board charged a $5,000 deductible to an owner after a tree fell on their garage. The owner sued, saying the HOA should have split the deductible equally. The judge sided with the owner because the document said shared cost. Don't make assumptions. Clarify your deductible. Look at your policy up front and put everything in writing and communicate this to your owners every single year. Claims don't just happen. They unfold over days, weeks, and even months. And how you as a board handle those first 48 hours can make or break the outcome. Here's a standard claims process. An event happens, whether it's a storm, fire, flood, water intrusion. Immediate mitigation has to take place. Tarps, water extraction, take those safety measures. Then we put the insurance company on notice and we file with the master policy and we inform the HOA's insurance agent. Then an inspection happens with an adjuster to determine what the scope and the value of the claim is. Then the board has to make a decision, choose whether to file, assess the deductible, or approve the repairs. Then contractor selection to make sure that they're hired and they're overseeing the repairs. And then lastly, owner communication. Keep the impacted homeowners informed about the status and about every step along the way. So here's a story. After a hailstorm, a board waited 3 weeks to file. The claim was denied due to late report, and the HOA lost $320,000 in potential recovery. Meanwhile, another HOA nearby had mitigation on site within 12 hours, filed that same week, and had repairs underway in 90 days. Speed, documentation, and coordination are everything when it comes to an insurance claim. At RowCal, we break insurance support into 2 specialized services. REG, RowCal Association Insurance Group. REG is a dedicated RowCal service that works directly with you and the rest of your board members to manage and secure proper master policy coverage. Align coverage with governing documents and building types. Evaluate deductible strategies, and then coordinate with independent insurance agents. They guide the board through policy renewals and claims. Think of REG as your insurance advisor, not just during a claim, but year-round before issues arise. RowCal Construction and Maintenance, when disaster strikes, you need speed and expertise. That's where our 24/7 emergency services comes in. RowCal Construction and Maintenance is responsible for the rapid emergency response, water extraction, and structural mitigation, coordinating with engineers and remediation teams, providing bids, and managing the reconstruction process. They are serving as your boots-on-the-ground project coordinator. These 2 RowCal divisions, REG and Construction, work together to make sure your HOA is protected and positioned to recover quickly and completely. Insurance isn't a one-size-fits-all. The right policy depends. Type of building, condo, townhome, single family. Where are you located? Geography and weather risk, hail, flood, wildfires. What's your claim history? You may be in a high-risk pool. Also, what's the board's risk tolerance and deductible strategy? We recommend working with an agent who specializes in HOAs. They can quote multiple carriers, and they can review your CC&Rs to align on coverage, and then also help educate your homeowners on HO-6 needs. A real story. A townhome community switched agents to save $4,000 a year, but the new policy had a wind-hail deductible of 3% per building. When a storm hit, the deductible totaled $360,000, nearly bankrupting the HOA. What seemed cheaper cost them so much more. Let's recap. As a board, you are not just managing policies. You're managing risk. What do great boards do? They understand their master policy and the deductibles. They educate their homeowners on the HO-6 coverage and their loss assessment riders. File claims promptly and communicate clearly, choosing policies that reflect their property and their risk profile. They also leverage RowCal Association Insurance Group, REG, for policy guidance. They use RowCal Construction for 24/7 emergency service and repairs. Insurance isn't a nuisance. It's your safety net. Let's make sure it's one that's built to catch you. Now, thank you for your time, your leadership, and your commitment to your community. Have a wonderful rest of your day.